All right, hey there. Good afternoon, everybody. Good morning, good afternoon, good evening, depending on where you are. It's still just morning here. A few minutes after 11 a.m. Central Standard Time here on Tuesday, the 10th of May, 2022. In back to overcast morning here in Bernie, Texas. I'm Christopher Franks with Texas West Capital. Great to have you all chugging along here, dealing with everything that's going on. I mean, guys, listen. There's nothing going on right now that we didn't talk about for the past year or two coming in. Everything is kind of taking a beating, right? It's just what we discussed. And as I discussed at that time, at the beginning here, everybody's going to keep fighting it, right? And that's what they're doing. Stocks, people are still trying to buy stocks, still keep buying the dip on that, even though it continues to push lower. Gold and silver, still, haven't made their runs up like they were expected to, right? Supposed to be these hedges against inflation. Inflation's at these, 40-year highs, and neither one of them are making new highs. As a matter of fact, they're pulling back right now, right? So much going on. The things that people believe are going to happen, not happening, and things that they don't think will happen are happening. The dollar continues to rally, man. I think we've got a wave 3 at the rate we're going, probably around 108, 109, somewhere right up around there. And that's just the wave 3 on the way up, guys. And as that goes up, again, it just kind of tells us what's going on with risk, basically. That market believes that they're in a risk-off type of area. So, get your dollars. You need them to pay that dollar-denominated debt, right? You can only pay it in U.S. dollars, so everybody's got to go for it. Interest rates rising like they are makes debt more expensive to pay, which you may think is difficult, and it may be, as a single person or whatnot, little family. But man, these large corporations and countries and whatnot having a heck of a time as well. So having to pay U.S. debt, with the rising interest rate like that in U.S. dollars, so a rising dollar, really just kind of just hits you twice over. Companies that have to do that, are not able to continue to increase their productivity, to become more lean. They're not able to do that. They can't put the money into it. They can't put the money into producing more because the more of what they're making has to actually go to pay that debt, right? And on top of that, if you've got people slowing down what they're buying because everything's rising in price, everything's rising, well, then they're making less profit too. So less revenue plus rising costs in servicing their debt, makes life tough, right? So, if you're a country, that kind of, depending on how you look at debt, what lens you look at it through, it makes it difficult to continue doing your public stuff that you do, right? Giving all those public services and whatnot. So a lot going on with all that. So we'll talk about a little bit about that today. We'll look at the charts. Bitcoin approaching that 28,800 support level there. But still potentially within a triangle right now. Same thing with the euro. A breakdown of below 28.8 doesn't necessarily indicate that 5 waves is in, but it sure does put a lot of pressure toward that, right? So we'll look at another possible count that maybe has a wave 3 at the swing high, at the all-time high, which gives us a WXY that's in process right now and may be nearing. We may get just a dip below 28.8. We might get a bullish SFP off that. Or even on the weekly, we could still get a bullish SFP off the recent swing low below the recent previous wave C support there. So a lot going on with all that, so we'll talk about it. Who's here already? Let's see, Nevlusian. Who else is here? Name Mr. Wilkes. I am well. I hope you are as well, sir. Blaze checking in. Mike Slane is here. Oscar says stablecoin at 60 cents. I think we're talking about UST there, right? That, what is it called? The lunar thing, right? With the LFG there. Remember we talked last week about how they became the second biggest holder of Bitcoin? And now look what's going on, right? Mason, what's up, buddy? Abdel, good to see you. Camille K is here. Good to see you checking in as always. Michael Otis, talking about that Luna ARB was insane. Made 70% on the UST, USDT. Yeah. A lot of people make a lot of money off that for sure. Let's see here. Oscar says that Saylor is down on 17 out of 21 Bitcoin purchases as of this day. Yeah, didn't he? I think he just released some. I was looking, just glancing through the the mentions and whatnot. It looks like he just released some kind of thing. Oh gosh, what was it? Maybe some kind of investor thing for his company, where he was talking about how they've got all that Bitcoin that they can use to add as collateral because they have a certain amount of servicing. Oh, I can't remember what it said. So many hundred of million or whatever a year, not hundreds of million. But they've got that, they've got to pay so much to service that debt every year. And even if price was to, he says even if price was to drop below 3,500 and whatever it was, that they could pledge other collateral. But man, is he really thinking 3,500? I'm not sure he holds at 3,500. I don't know. Or does he have such a big ego that he goes down with his ship? I've talked, many times about Saylor and how he was that, that flying high there at the peak of the dot-com bubble, and how he was, this princely guy up there, and how his company almost went to zero in the subsequent crash. And then as he came up, how when the price started rallying back up, all his competitors left him in the dust. 2015 or so, all his competitors started rallying up their price. He just stayed flat there through 2020 or whatever, when he started actually getting into Bitcoin. And that's basically the only reason MicroStrategy stock has continued to rise when it did, right? And of course, I think we took a look at his chart last week, didn't we, where we saw it was coming down. So, with the rest of tech, I think ARK's down something like 75%, I think, off its highs. ARK's ETF. When you're in one boat, if you're all in tech and tech's doing great, you're amazing, right? If tech starts sucking wind, hey, and you're all in tech, you're going to be sucking wind too. And that's exactly what's happening with ARK there. So a lot of that going on there. Nothing surprising though, guys. Nothing we haven't talked about seriously, right? Over the last year. More. Oscar says, no voice. He says, oh, my bad. I was muted. Check yourself. I was actually looking over here now. Make sure make sure the volume's on over here. Hey there, Andrew Bennett. Good to see you. Data checking in here as well. Who else do we got going here? Telluride, what's up, man? Checking in from the mountains. Let's see here. Hey, Carpio is here. He says $4.20 a gallon for gas this morning in North Texas. Oh, man, you guys are paying $4.20 up there? I think we're still at around, I was just looking at yesterday or this weekend, I think we're like around $3.89 maybe, I think, here. Yeah, something like that. So, but again, if oil is topped out here, guys, and it looks like natural gas may be topped out. I've got a new count on that. We'll take a look at that today, too. I was looking at potentially going higher and higher, but I think it might have topped out. And so both of those we could see, dropping substantially over the next while. So, at least it'll give us some relief right there, right? But where are you going to go? Let me see here. Michael says, Bitcoin in for another drop. Definitely possible. We'll take a look at that. What's up, Mark? Bitcoin Anarchist checking in from Australia. Early morning for him as always. Good to see you. Carpio says, it feels like the Fed is going to beat down the middle class and prop up your leads in order to bring this economy in line. Well, that again, I don't believe that the Fed has any control over that other than knee-jerk reaction, guys. Remember, the way I view the charts is that there is something already going on, right? The social mood, the way that people feel in general. And that influences how they buy and sell, which is what the charts show us, right? And so if the market already feels a certain way, it's going to show itself in the charts. And what the Fed does is always reactionary. It's always trying to catch up. It's always behind. So I don't think the Fed actually does much of anything, guys, to be honest, except cause more pain. We talked last time about how the Fed raising its interest rates and whatnot really hurts the middle and lower class, right? Especially the middle class, though, because they don't get a lot of the breaks that the lower income classes do, but they have to shoulder the brunt of all the tax stuff and of the interest rate hikes and everything as well. So, yeah, it's a tough thing, man, when you've got the Fed always coming in behind and just doing its thing. But people were doing really good prior to this. They had a lot of extra boost in their stuff. So, it's just one of those things. I always talk about the boost and boom, the bust and boom cycles being just a natural part of government intervention. Everybody says it's a natural part of capitalism. I believe it's more of natural part of government intervention. Government gets in there and prolongs things that they shouldn't prolong. And that leads to bigger reactions, right? Larger reactions. So it is what it is, guys. You just gotta take heed, right? Let's see here. Let me see here. Michael saying he wonders if we get some sort of cascading liquidations down to retest 20. I don't know. It's always possible, right? I've got two areas of interest I'll talk about here in a minute on Bitcoin. If we break down below 28.8, I've got two areas of interest that I'm looking at before we even think about 20. So yeah, we'll keep that. DG wants to know, are we going down to 21? Nobody knows for sure. This is, guys, if you follow me on Twitter there, you'll notice I posted something recently about the difference between predicting and forecasting, right? So I tend to, I forecast what's going on. I don't predict, and there's a difference in that. If you're predicting, you tend to lose money. If you're forecasting, there's a lot more thought in that. There's a lot more logical understanding what's going on. A lot more attention is paid to validation and invalidation levels and proper risk management. And, that ends up building up your capital account versus, again, predicting, which usually ends up tearing it down. And we don't want that, right? We don't want to lose money. Whether the market's going up or down, we want our capital account to continue to rise, right? That's what we should be looking for. WhiteR21, what's up, man? Dancer Eddie checking in. Michael Waldrop here. Who else is here? Chance, what's up, man? Chance down the street, he says. ARM is here as well. Hold Howell, what's up, man? Good to have you here. Leo, good to see you. Scott checking in from Tennessee. Let me see here. 618 Finance, man. Good to have you. Who else is here? The Magic. Oh, man, I'm going to totally screw this up. I don't know if I can read that. The Magic Lord BTC. Is this channel dead? It's never been very popular. I don't sit here and blow fluff up your rear end, so I don't tend to get all the attention the other ones do. But my longer-term pictures are usually pretty spot on. I still still don't get it right all the time, but they tend to be pretty scarily correct. So yeah. Let me see here. Andrew wants to know, on the Bitcoin Daily, is Wave 5 in process off the 69 top? Man, I don't think so. That big. And again, we're going to look at that here in a minute as soon as we get to the chart. But that was a big move up here most recently. It looks more like an ABC or a WXY than it does a 5 move down. That wave forward is really outsized compared to what the wave 2 would be. So I'm tending to lead more toward a 3 than a 5. So a 3 being, again, a corrective move potentially. We'll talk about it, though. Ali, what's up, man? Long winter in Norway. Sun is finally up. Your friends asked you why you have dollars instead of your currency. He says, I told them, watch me. It's been good. It's good to have been right, on that for the last year and a half or so. It's made trading really easy. Bitcoin's easy to trade, guys, when it's going up. Everybody's everybody's an expert in a bull market, right? But again, it's just, so pick your bull markets, guys. Here, if I can tell you anything that may help you as a trader, first of all, it's understand proper risk management. Do not go without it. If you're going without it, you're going to lose all your money, period, end of sentence, guys. There's really little chance that you'll make money, and most likely by a long shot, you're going to lose it all and more, okay? If you're not using proper risk management. But beside that, the other thing that I can tell you is go in the direction of the trend, right? And which is why, as prices pulled off down here, we say, okay, well, maybe this is going on, but it has to go above this level in order to start looking like it is, right? As long as it doesn't go above that level, we're still headed down. I mean, it's as simple as that. And I think, unfortunately, that's, again, we get back to the predicting and forecasting. That's forecasting, right? Predicting says, oh, it's going to go up here. And the problem with predicting is you're constantly going to be wrong, right? I mean, just as human beings, we're going to be wrong a lot, especially if we get those smaller time frames. But a lot of people come in and they hear somebody like myself speak, and they're like, oh, look, so they say it's going to go do this, rather than actually listening to what's being said, right? And so they take it as a prediction rather than a forecast. And end up losing their money a lot of times, unfortunately, because they don't understand how to play that. They're like all in, fully deep, right? All in, go in, whatever. Don't do that, guys. Don't do that. Let me see here. TV Canal, man. TV Canal is one of those. I'm going to tell you guys right here, right? So what did I just say? And we can look at what TV Canal says. No offense, but you are blind bullish from December of 2021 from 60K. No, I'm not. I've never said it is definitely going up. I've never said that the top isn't. As a matter of fact, I've said it is possible that multiple times I've said, if you've listened, because I've said it, that wave 5 could have potentially ended at the all-time high. That until we actually break out above there, it's still possible we go lower. And so I give you these, okay, if we're going to do this, then logically we need to get through this level. If we don't get through that level, then we're still down. I don't know how that's blindly bullish unless you aren't listening. This is what I'm telling you guys about. You cannot possibly trade successfully if you can't listen, if you can't pay attention, if all you hear is what you want to hear, right? And unfortunately, there's no way I can make you listen to what I'm actually saying. I can't force you to hear it. You're going to hear whatever's in your head that you want to hear. But if you go and look back, you're going to see I've never said it's done. I said I think we've got higher up, and we've still possibly got higher up. There's still possibilities. But until we take those steps that are needed, getting through those levels I keep mentioning that we haven't gotten through yet, we're still down, guys. It's not really that difficult to pay attention and hear the words that are coming out of my mouth. So just a heads up, if you're new here, pay attention to what I'm saying. Don't think about whatever you want to think about's in your head, okay? All right. So I've given you lower targets all the time, TV Canal. See, this is what I mean. Again. This is what I mean, guys. You cannot possibly do this and expect to be a successful trader. All you're looking for are predictions instead of forecasts. You're not looking for possibilities. I always give you guys upside and downside targets. Upside targets, if we get through them, then the next one, right? But if we don't, and we drop down through the invalidation level, the lower target down, then I give you that lower target all the time. How am I not possibly doing it? But see, TV Canal wants me to just say, listen, the top's in, we're going down. How does that help y'all? If I say that and I'm wrong, how does that help you? Does it not help you more to know that, listen, based on the structure, we need to break down through here to get to here. Or we need to break up through here to get through here. Which one makes more sense? Which one is the one that you should be thinking about? See, this is the thing. But it's all good. So I'm done talking about that. I talked about the weekly pivot long before you ever did, TV Canal. So it is what it is, man. That's it. I'm done talking about that. Let's see. Yeah, Coinbase going down, right? But we talked about that, though, right? When they first came out, I talked about how it was dropping and how we were continuing looking lower down there. What I think, I said something like 129 or something, potentially lower. And so we've continued to drop down there, right? Yeah. So, no real surprise there with Coinbase. Andrew says weekly RSI is very low compared to March 20 low. Yeah, so again, let's go ahead and jump over there, guys, since we're talking a lot about Bitcoin here, right? Let me see here. Which one's the chart here? Nope, not that one. Let's look at this one here. Okay, so let's zoom out to this one here. So this is the possible triangle, right? So as I continue to talk about, if we lost this low, we would look into, I gave you a couple of red line targets, right? The first was this one right here, the EQ of this structure right here. And as you can see, we dipped just a bit below that right here, right? I said, if we lose this, I said, this is where we're looking. See, some people don't listen, right? But this is what I told you guys. If we lost it, that's where we're going, right? And so here we are. And if we did that, I said, because we were looking at an A, B, potentially a C here, maybe working on a D or a D and an E right here, right? But if we broke down, I said it's still possible this could be an ABC for C, right? Or a WXY. Now, here's my thing. If this is going to be a wave 4, I was asked about this thing because Andrew was asking about this, right? So the idea that maybe this is a 4. Well, okay, so let's say, I don't know that you get a clean 5 coming down. I've looked at it a few times. I don't think you really do. I think it's much easier to get an A, a B, and a C here for a W, and then an X, and then an A, a B, and a C here for a Y, right? Now with this, it's possible this might not even be the bottom here, that this might be wave 3, and we might even have completed wave 4. And we still have a wave 5 to come down, and I'll have that target on the other chart there. But it'll take it slightly below this drop right here, right? Still, potentially. You know, just a wave 5 based on the wave 4 height, if wave 4 is complete, would get us just, you know, about $1,000 below this swing low, right? But wave 5 could just dip right below wave 3 and be done as well. So we'll have to watch and see if we get the dip down first to mark that wave 4 is done, right? Now here's the idea. It's possible, you know, right now we're looking at this as a 1, 2, 3, and then potentially 4, right? Here. And then 5, going right. Or, as I continue to say, and certain people weren't listening to, 3, 4, and potentially the top being in at wave 5, right? Right? The wave 5 potentially being top here, heading down. The other possibility, maybe we've got a 1, 2 here. And then maybe we've got a, something like a 1, like a 1, 2. My bad. 1, 2, and then 1, 2, 3, 4, 5. So it gives us a 1, 2, 3. And then this would be 4, right? So this would be 3 down is 4, right? And, you know, in that case, if we were to drop down below 28.8, that would actually work out. Again, a WXY, right? Wave 4 finds support around wave 4 of the lesser degree. That's what we usually look for. Almost exclusively, that's what happens, right? And that gives us the potential to hit this S1 pivot here on the weekly. Again, this has been the target if we lose 28.8. That's that bigger target that we're going to tend to look at, right? 26.2, 26.3, right around that area. And then if we were to get a rally off that carries us above, you know, impulsively above the weekly pivot, especially this swing high right here, again, same thing I've been saying forever and a day, 52.10, that area, then that's going to say, okay, the bottom's probably in and we're going to run the pivots up through the top at least. And so that's kind of where we're at the moment here. You know, do we reverse from where we're at? Do we dip just below and then rally up through the R5s? Or is the top here and we're coming down? Now, if we're coming down, this seems much more like a 1, 2, 3, right? And so then this becomes, again, nothing I haven't already talked about. 3 right here around 14.2, 14. That gives us 5 at around 10.692.5. And that would just be an A. We'll get a B up and we'll get a C on down here, probably closer to this, you know, 6,500 kind of area maybe. Let me see here. Probably something like that at least. Yeah, probably something like that. Maybe even down here around this 4,000 area here. But again, the idea with that would be the fact that this is like 5 waves up from from the beginning, the entire life cycle so far. So that would be a large wave 1 looking for a large wave 2 retracement. So there wouldn't be anything surprising in that, right? But yeah, so we'll see what happens, you know, again, as we continue to look here. So if you've been paying attention, then you probably remain short right now because there's been no reason to go long because we haven't, you know, at least on these larger time frames, because we haven't gone through those levels we've talked about, right? So you continue to be short. So if you're listening, you're doing fine. If you're not listening, you're looking kind of silly. But anyway, I digress. But yeah, so here we are. Not very convincing yet. It started out well. It went up about 10%. We've kind of pulled back here. You can see that on the, this is the daily here. You can see that we've got this dip down here to around 24.5 or so on the RSI. So we're oversold in that. We do have this bounce off the bottom here in this bullish cross. trying to rally up here in the Stochk RSI, but we're still in oversold. What's interesting about this drop, coming down from here is, okay, so we hit this volume high right here, but volume has continued to drop off all the way through it until we get to this point right in here, right? So it's not like we've got this consistent rallying of volume up here through it as we've come down. Now, why is that important? Because that tells us that we don't have increasing selling going on. We had, look at this. See how this volume has gone up all the way through this down run here? See how volume's gone up? So we've had consistent selling all the way through that, right? Here, we actually don't have selling until this point here. And even that, other than the spike here at the low, this area right here, is a lot lower than what we had even, through this area here. It's about in line with kind of this beginning here. So it's definitely worth paying attention to how much selling is going on there and what's going on with all that, right? Let me jump into a little local chart here. Here we go. So here's the 15-minute. Now I've got a possible count off here, and it's possible that five-way, that it's done here, that everything's done on this, and we're complete, right? I don't like the rally so far from the lows, though. Looking at this rally here. If we look at the, it's possible this could be a 1 and then a flat for a 2 and then a 3 and then we got a 4, some kind of leading diagonal here. And this would be an expanding wedge, which means wave 5 should be larger than wave 3. So we can get us an A, a B, and a C, or I guess it'd probably be a W. So an ABC is a W, X, and then an ABC is a Y. And we need this to rally up and through here. So we need this to actually break out above this swing high here at 32,375 and 53 cents to actually say, okay, maybe this might be a flat or a leading diagonal here working out. I said flat correction here, but not a flat correction, just a 1, 2, 3, 4. Get a 5 up there, right? So let's say this is low. Let's say it's WXY on a 4 here. Then, we would be looking, if it were to break out above this, we're looking for something beyond the 1.0. So something beyond 32.9387. So I would think, this makes a good target right here, this wave 4 supply structure up here. And look at the EQ is right around this daily S1 pivot, right? Around this day. So that would make a good target. It's more than 1, almost 1, 2, 3, 6. So we could get something like a 1, 2, 3, 4, 5 up to that area there, and then it looks something like this here, right? If I can do it. There we go. So then it looks something like this, right? But again, I'm not happy with the structure going up here, so I am not overly confident anything like that's going to happen. But if it does, which is what forecasting is all about, then you take those next steps, right? So a breakout above this swing high right here leaves this as a 3-wave decline. That's corrective. If it's corrective, generally we expect to rally up in 5 more waves. Or in this case, I guess it would be 3 waves, right? So you got ABC here, right? So ABC in here, ABC in here. Get 3 waves up toward there, right? Leading diagonal. The question is then, if we got that, where would we kind of pull back to? So if we did get that, get us a 1 up in here, 50% brings us right back to this 15-minute pivot. We're going right above the R1 pivot. So kind of this area right here, the 38.2 to 50 would be my target. So it'd be like a 1, 2. But if we got that, I would expect a really strong 3. I would expect a nice, probably overextended wave 3 coming out of that because of the leading diagonal here and the way it's leading here. Building this wide base is what it would be doing. But if we're dropping down below here, it's still possible. 1, 2, 3, 4, 5 maybe. But if we lose this swing low right here, this is why I've got it marked at 35.94.49. This looks just like 3 waves up. So again, like this 3 here, would be corrective. So this would be wave 3. This would be wave 4. And then we come down for 5. And that's where this target comes in, right? So if this is wave 4 of C of Y, or whatever you want to call it there, coming down off the all-time high, that 1618 right there would be the expected wave 5 target of that. So it would expect to terminate around that area. But again, all wave 5 needs to do is come down in 5 waves below wave 3. So if this is wave 3, this is wave 4, we just need 1, 2, 3, 4, 5 just below this and to be done. In terms of a range this way, right? In terms of this potentially being a range right here, that would just be a spring below the bottom of the range and rally back up, because that would make this range then a, accumulation right there in this short time frame. So that's what we're watching. We're looking, does it break down below 30.59.49 or ultimately above 32.645.49? Though you can get a little easier start or a little earlier start right here at 32.237.53, because again, 1, 2, 3 waves down. So breaking out above this leaves this as corrective. So we should be looking for an impulsive advance afterward. I mean, that's really where we are, guys. Breaks down here, it's probably going to break, it should break down below the swing low here. A fully advanced wave 5 would get you right down there around that 27.985. And that would dip you then. That would dip you then right below here. So in terms of what's going on here, there's other things to look at. So bullish SFP, right? An SFP is a swing failure pattern. And so what you're looking for is a significant length of time, right? And you're looking for a breakdown below support and then a rally back up above it. So right here, if today's candle, if let's say the count is bullish coming off the bottom and we were to rally on back up above this swing low here at 32.933 and 33 cents, you can see we rallied up to it. But if we were to go up and close above it today, that would suggest this is a bullish SFP, a bullish swing failure pattern here above that, right? And we should then expect to continue higher, at least toward the top of this range here. We can look at the same thing over here on this 28.8. If we continue to break down and we dip below it and then close back up above it, again, a bullish SFP. This one much bigger, though. This one from June of last year rather than from January of this year. And so it's a significant reversal pattern. It's what we kind of look for, right? Whether it's at the top or whether it's at the bottom. So, bearish SFP at the top or a bullish SFP at the bottom. So just, another way to potentially look at this, because what does it do? Well, what it is in those situations, you've got your breakout traders and your people trying to get in before it breaks down. And so they're all going short in this area because their confidence is going to keep going down, right? And instead what happens is you have those bigger buyers sitting right here underneath it. And they immediately, it just drops into this liquidity pool that's just kind of sitting there, right? This iceberg orders you might see hitting there. And so as you keep selling down into it, it's not going anywhere. It's just absorbing all that selling. And then all of a sudden you see a buying going in when that's done that rallies it right back up. So all those breakout traders get caught and just about immediately become underwater. And then they've got to rush then to cover their shorts that they were in, right? To protect themselves. And so that's more longs added on top of it, pushing price back up. Now, because of the length of time, we can look at this as weekly. So we can look at this potential bullish SFP right here on the weekly. So if the weekly candle closes above that, it's good as a possible bullish SFP right there. And we should see price at least returning to this area right here. If not, break out and head up higher. Same thing right here. If we do continue to break down below the swing low here, we could even come down to that weekly S1 pivot. Same target I've had for months and months and months here with y'all. And so it breaks down there, grab it and rally it back up. You just have this weekly wick down here or a daily wick down there. Yeah. You give you that bullish SFP off this. And again, you should return at least up to this area, most likely breaking out and heading higher and running all these pivots up here through it. Other ways to look at this. Let me see here. This is all local here. Let me zoom in a minute. Let me get over here. Okay. So other ways to look at this. You can put your trend lines on here, right? And right now, if this were to be the bottom in that, I mean, you've got a pretty clean wedge going on there. That's a pretty wedge. And the ABC down, or the WXY would be whatever it is, into this wave C, would then say we've got D, 3 more up for D, 3 more down for E to finish the triangle and then go. If that were to continue. But remember, that breakdown below this 28.8 over here on Coinbase, that invalidates the triangle. It's no longer valid, right? So that's what we want to watch. Now, if we're looking at that, again, you know, we've talked about volume price action here. It looks a lot better on Ethereum, right? Yeah. So right now, Ethereum is still above the wave C swing low here. So it is still possible this is a D and an E, or this is, you know, A, B, and then we've got C for D still coming in, right? Still possible. In terms of this range here, it's also possible this is just a spring right here. Look at the volume throughout this range here. You know, again, same thing I continue to point out. This range. And look at how that volume drops off until we get to this spring here, and there's a sudden spike of volume at that dip below the range support here, right? So I wouldn't be surprised. I'm not saying the low has to be in, but I wouldn't be surprised if it went up from here and continued up. But that's why we have, again, all those validation and invalidation levels. If we do break down below wave C here, guess what? This just becomes A, B, or W, X, and then C or Y for wave C, potentially here. That triangle, in that case, would only be invalidated if we drop below wave A swing low over here at 1651.50. And we've got a high volume node, a really big high volume node above that. See this area of resistance and support? It's a strong area. But we'll see. We'll see if we can hold that, right? If it does continue lower. I definitely like the volume and price action on this one much better than even here on Bitcoin. I guess I'll look at another chart here. Than here. Beggars can't be chooser, though. What we can notice is with this range right here, volume drop off until the breakdown below the range low. So again, wouldn't be surprised to see us rally back up, and then all of a sudden you have this, where's my thing? Here it is. You know, because we're looking at this range right here, right? That's our range right there. And so, again, with the height of volume, there could be a terminal shakeout happening here before it rallies back up. So, you know, I'm not in at the moment buying any new positions or anything. I'm waiting to see how this kind of translates and turns out. I'm looking for my, you know, validation or invalidation levels, as I've talked about. So, you know, in the meantime, continue shorting the euro, the cable, the loonie, the Aussie dollar, all against the dollar. Making good money doing that. I don't have to jump in here, you know, just because there's a chance. Listen, guys, here's the thing. If this were to be the bottom, if it were, you've got I mean, the price is going to go a lot higher. You've got a lot of room before you have to get in, right? Don't feel like you have to catch a falling knife. That's how you lose your money. Start on the smaller time frames and see if it can start confirming, right? So again, if we look at this one, I've got us on the 15-minute here. I'm not happy with what I'm seeing here, but it is possible it could be a leading diagonal. So I want to see, do we get one more out toward this target area? And then I want to see a 3-wave pullback to this area. And then if we break out above this area again, then I'm starting to feel on the shorter time frame like maybe, just maybe, that bottom may be in. But right now, nah. It could drop from where it's at. It could drop below here, and then it's only 3 waves up. It's only corrective. We've got that lower low coming in. No reason to jump in just because there's a chance. Look for your higher confidence trades. Okay? Make sure you've got more of a chance. Give yourself a chance to really make money. Don't just play the market like you do lottery scratch off tickets. Don't play it like that. There's no need to. Locally right here, even if I zoom in even more, what do I want to see? Well, I want to see a nice impulsive breakout about this here, right? Resistance, support, resistance. I need to see a nice impulsive breakout above that just to set up a possible breakout here, to set up a possible breakout here. I'm just interested in watching at the moment. This little bit of movement here is not going to make a whole lot of difference in the grand scheme of things when you're looking at potentially running those pivots up above 150,000. So if the bottom is in, give it time to breathe and show you that it is. Be patient. Okay? If you're short, there's no reason to go to cut out that short yet. Well, depending on where you got in short. But if you got a short much higher up, there's no reason to cut out that short just yet. Let the chart show you that it's bullish, and then you cut your short and you go long. But Chris, I'm going to lose money. You're not losing money. You've already made money on the way down. You're giving back a little bit of that profit, but that's what trading is if done properly. All you're interested in is just locking in profit consistently. That's the key, guys. It's not buying the absolute lowest price and selling the absolute highest price. You're not going to be able to do that regularly. So you're going to lose more money than not doing that. Just concentrate on locking in profit consistently. If you can do that, you'll be fine. All right. Let me just kind of catch up with you guys, right? Let me see here. Just kind of get back to your comments here. Crypto Critical, what's up, man? He says, my Hearst cycle voodoo analysis says the bottom is in soon with a peak coming up in July. I mean, that would make sense, right? That would make sense. Other ways to kind of look at this, guys. This is something else I've talked about, right? Looking at it. So, oh man, this is just this one. Let me go ahead and bring in the BLX over here, okay? Because that BLX goes all the way back to the beginning, right? In case you guys don't know, you can type in that Brave New Coin Liquid Index, and that'll give you the chart here. It's a daily chart at minimum. It only goes down to the daily. You can obviously make it larger as you see here. But it goes back to your beginning here, okay? And so if we look at that, again, the idea that this is 3, this is 4, and we're working on 5 of this whole sequence up, right? And I've seen some ideas that maybe this is 3, and this is 4, and then this is 1 of 5, right? So 5 is going to overextend. So we'll get a 1, 2, 3, 4, 5, right? Possible. But, what are we talking? We're talking about Hearst cycle, right? Yeah, so, if we're looking at this, the reason why I look at this is, you see the weekly here? We're almost oversold. Now, if we look at this weekly low, the only time the weekly in the entire time has dropped below 0 or below the 20 here, below the into oversold, is January of 15 and December of 18. Right? January of 15, 18. So the cycle lows in here and here. It didn't do it at this cycle low, right? Going up here, right? Did not do it there. Didn't do it at this low, this large drop here, right? So we're just kind of at this point here. Low, higher low, right? And so right now, low, higher low, higher low. We can actually go from 2015 here. But we are down at this kind of area here where you've got these lows, right? Along the way here. So it's a support area on the weekly RSI. Weekly Stochh RSI, of course, is well oversold here as well. So, again, even a dip down to the S1 pivot, saying maybe this is 1, 2, 3, 4, 5, man, that would tick a whole lot of people off. because people have been, definitely going up, definitely going up, right? And they get a pullback, and they finally give up on the drop through 28.8, only to find support just a few $1,000s lower, and then it rallies hard up. Man, that would really take... And people wouldn't be interested in getting in until it's up over here above the all-time high. So they lose money, right? Because they finally sell, if they're buying up here, they finally sell it at a loss down here, right? And then it goes up without them. So I could definitely, same thing I'm talking about, I could definitely see that happening. So, macro-wise, we want to see an impulsive breakout above this pivot, right? But you could probably get in a little bit earlier here on a breakout above this descending resistance. If you're more risk adverse, or less risk adverse, more risk tolerant, you could even potentially get in on a breakout here. So this is basically an inverted Chuvashov fork here, right? And so, Chuvashov fork kind of works like this, right? So if you were to do this right here, whoops, not right there. You could do something like this right here, right? And then you draw it right here. So there's a Chuvashov fork, right? Here's a reverse Chuvashov. I can't even say it. Chuvashov fork. Them Russian words kill me, right? Anyway, so I mean, it's possible that you could potentially get in a bit earlier on the macro level, breaking out through this descending resistance. Your target has to be this resistance, though, and you have to be understanding that you're taking on a lot of risk because you're getting in so early. So it could drop lower. So you got to understand where your invalidation level would be on that. But a break through this part of the fork would give us a target of this part of the fork. An impulsive breakout about this part of the fork should signal that the bottom's in. But your first target's going to be this area right here. This pivot, oops, to that swing high there. That 50, what is that, 52,000? Yeah, right around 52,000. So, yeah, and what's this down here? 48. So this $4,000 range right here. So, a breakout of here would have a target of this. An impulsive breakout of here would have a target of this. Impulsive breakout above that. I mean, there might be a temporary stop here and a pullback here. So, breaks out, pulls back, and then breaks out. But we all but guaranteed we're going to break out through that all-time high and rally up through 5 pivots. At least. So looking at this chart, again, that would be in line with Bitcoin's usual process, right? Its usual modus operandi, right? Blow off, blow off, blow off, right? Give you a blow off. But as I continue to tell you guys, it's not necessary. We don't have to have a blow off here. Months ago, I talked about the possibility that this could be the top. And again, this would be a larger distribution than these simple ones here because, again, it would be potentially wave 5 of that whole move up. So longer distribution area to send it down, to get it going down lower. A lot of ifs right here, guys. If anybody's guaranteeing you anything and they say there's no way it's going to do anything else other than what they're saying, they're either going to be right or they're going to be wrong. But that's predicting. That has no place in trading, or it shouldn't. Doing this for almost 25 years, guys, I'm telling you, you should not be trading that way because you're going to lose a heck of a lot more money than you'll ever make. Understand what's going on and the possibilities are going. Remember, Elliott Wave, a lot of people are like, oh, I don't like Elliott Wave. It's so subjective, blah, blah, blah. It's not really, not if you do it correctly. And all it really is doing is showing you where the support and resistance levels are. Your horizontal levels. That's all it's really doing, guys. And price moves in a certain way, right? That's why we know if we're looking at a 1, 2, and we got a 3 coming up, that's why we know we're looking at 1, 6, 1, 8. Much more than half the time, that's where it's going to get to. Sometimes it'll get a bit more, sometimes a bit less, but most of the time it's going to get to that 1, 6, 1, 8 area because generally price moves that way. But all Elliott Wave is doing is just giving you a better forecasting method based on those. So you can trade support and resistance levels, supply and demand structures, that kind of thing, but it's always a temporary trade. It's only that trade, and then you wait to see what the next trade is. Elliott wave allows you to potentially get a forecast on where you're looking to go if you're breaking through those levels or if you're getting rejected at those levels. Elliott wave helps you understand that there's impulsive and there's corrective movements. Right? So, this is the benefit of it, but it doesn't really do anything super special beyond what it's showing you, which is just where those support and resistance levels are. Okay, guys? Let me see here. So these are the possibilities, all right, of what may be going on here. Again, nobody knows for sure, but what we do know is if it goes through these certain levels, then it opens up those larger possibilities. And if it goes through those levels, it opens up the larger possibilities. So we continue to trade from the shorter term to the longer term, depending on how price moves through that, right? Again, if you are short, let's say you're short here from this pivot, there's no reason for you to go long, right? Or to close your short yet. You want, on a smaller time frame, you want to zoom in and see that it's possible that maybe that bottom is actually in. If you're not getting that, there's no reason to go to close that short yet. And again, your response is going to obviously be, oh, but Chris, if I have to wait till it goes up here, then I'm going to lose all this profit. No, you're just confirming that you should be out. Because what if you go ahead and get out here because you think that's the bottom and it continues to go lower? It's always better to get confirmation when you're entering or exiting a trade, guys. Okay? Especially if you don't have any predetermined targets. If you're just short here, well, let's say you're short here and you look maybe to the S1 pivot. There's a predetermined target, right? But you've got to watch these shorter time frames because if something happens on that 15-minute, 1 hour that says, hey, listen, it looks like the bottom is probably in here, and it heads up here, you don't want to keep holding as it continues to rally up. You want to go ahead and get out, right? Lock in the profit that you have and get ready for that next opportunity. That's what it's all about, right? So, anyway, what's up, Chris? Good to see you checking in. But yeah, so this is what we got going on here. Let's kind of jump over here real quick, guys. DXY. Let's see here. This is the wrong chart. My cleaner DXY chart. My new one. I've got it somewhere. Let's go ahead and load it up here. That's the one I'm looking for. All right. So now DXY is still kind of going sideways from wave 3 here, which means there could be some variation of wave 4 going on here, right? Especially if you look at the Euro USD. There's 3 different possibilities right now. But if price were to rally up higher, then 2 of those would be gone and third one would be the only one left. But, I mean, it's always possible. It's an unorthodox looking triangle, but it's possible maybe we have like an A, B, C, D, and then an E coming down, right, to finish some kind of triangle here. If we break out above this 103.99, though, that's not going to be happening, right? Let me see here. Oh, yeah. No. So if we come on down, if we come on through here, it increases the odds that wave 3 is in progress up here to 104.983. But we need a breakout above this wave 1 up here to really kind of say that triangle isn't going to be happening. But even if it is, even if this was, if we were to get a rejection in this area, come back down, it has to, reverse prior to this swing low right here to kind of do it. So, but it's a really ugly triangle. So I don't know that I really think it's all that likely. Just look and see if we can continue this higher here. But again, looking for the move to continue up. Well, up here, 106, 108, 107, 108 up here. Kind of really just kind of stretching this out as it continues rallying up there. The dollar's been the thing that we're talking about for over a year now. We talked about it from the lows off there around whatever that was, 88 or whatever. Got a lot of blowback for that. I continue to get blowback from people who can't understand the possibility of what's going on, and it is what it is. But the one thing they never do, they never come back here and say, you know what, man, I'm sorry for being such a jerk. I I didn't see that at the time. It was right. Never going to get that. People want to come in here and just throw their weight around a little bit and think that makes them look cool or something. I don't know. I think people just in general, they just have this desire to be heard, to be validated. They don't have happiness in themselves, so they go online searching for that. They want somebody to validate them. But even if they got it, it would never be enough. But this is a lot, I think, of just a lot of the product of what we have with social media, and everybody's trying to keep up. Everybody's always tried to keep up with the Joneses, right? Social media just makes it that much more prescient. It makes it that much more in their head, right? And so we get a lot of it. That's why you get a lot of the people online that act like idiots. They talk a lot of smack. They're jerks. They're not kind. They're just always rude. That's why you get that. It really is just a desire for them to feel validated because they don't feel validated in their lives. They don't love themselves enough. They don't understand that they don't, right? They don't understand that they need to, that happiness starts within. It truly does. A lot of people go on, you're like, oh, if I'm with this person, then I'll be happy. No. Or if I get this job, right? Or if I do this thing. But that isn't the way it is, guys. You're just going to continue to be sad and unhappy. You have to do these things for yourself. You have to be happy within yourself first. And then when you come online, then it becomes discussion rather than argument. Then it becomes discussion rather than put downs and attitude and egos, right? So I go in I've stayed away from commenting on people's stuff on TradingView, right? Because it almost always ends bad, right? Everybody takes offense. But this weekend, I went in and commented on a few people. I said, listen, you're doing that, but you can't do that because you're not doing this part of it, right? You're not doing it correctly. This is how you need to do it. Or if you're going to use that count, you have to do this, right? Trying to help people out, right? To let them know. Instant. Well, I had one guy that was really really kind about it. And he was like, man, I'm just new to Elliott Wave. I said, man, no, it's not a problem. I'm just trying to show you where that issue was so that way you don't make that same mistake again, right? That's what I do, right? Had another guy, though, who got very, very personally offended that I said that his Wyckoff couldn't possibly be because he had no volume. He didn't discuss volume at all. He just had a schematic basically drawn on there. And I tried to alert him to, hey, Wyckoff is about price action plus volume. It's not just this schematic thing. If you don't have the volume, you don't know that that's potentially a spring or potentially a secondary test or something, right? Or if it's distribution or accumulation. You can't even begin to guess, right? Oh, man. Oh, that hurt his feelings a lot. Bruised ego, big time. And so I got a lot of flack from back then. But this is what it means to be online, guys. This is, the nonsense that you put up with if you're out here in front of people, right? And it's unfortunate. It's unfortunate. People, they want to be right regardless. I wish it wasn't that way. The world would be a lot better, right? But people do. They take offense. They get hurt. They scream about how they're so much better than you. And it's just like, well, okay. It is what it is. Let it be. Go on about your day. I'm not going to sit here and argue with you about it. Right? So, guys, again, I always talk about humbleness in trading, right? Even me today, I still remain humble, right? Because I know a lot. I know a lot. It's just a product of being in for so long and being through, one, two, potentially a third recession, potentially into depression here, right? Dot-com bubble. I mean, since actively trading, dot-com bubble, GFC, and now what we're going through, right? So I've seen the market as it's happened, what goes on with these things, right? So I have that experience, but it still doesn't mean I actually, definitely know what's going to happen, which is why I warn you against that. Forecasting versus predicting, guys, okay? And hopefully you guys are understanding that. I know a lot of our members are really starting to catch on to that, and it's great. It's awesome seeing them, man. They're talking about how, prior to, listening and talking and learning about these things, they would have jumped the gun on trades, right? And they would have been underwater almost immediately. They would have lost out, these kind of things. And that's what it's all about, guys. That's what it's all about. So, when you're online, think about that. And it takes a lot. It takes a lot of being humble with yourself to admit that you're acting that way. It really does. I've got mad respect for those who maybe were acting that way, and then they thought about it and said, holy crud, I was acting that way. That ain't cool. I need to change that. And they go change it. Man, I'll tell you what, lots of love for that, because it's a hard thing to do. It really is. It's again, humbling, right? Your ego has to take a shot for you to do that. You have to give it a shot that it doesn't like. But yeah, hopefully you guys, if you are of that way, you learn not to be of that way. Because then that opens your mind a lot more to the possibilities, not just in trading, but just with everything in life. All of a sudden, you're not so absolute. Guys, guess what? Guess what? Life is mostly gray. Contrary to how you were raised, the social circle you're in, your religious beliefs, whatever, really, life is really gray. Laws are really gray. How do we know? Because, for instance, here in the U.S., if you kill somebody, you may get to go home. You may not go to jail. Or you may just get a short amount of time, depending on what happened. Was it involuntary? Was it voluntary? Was it manslaughter? Was it manslaughter? Was it passion? All these things give us varying degrees of punishment or no punishment at all. Was it self-defense? Life is gray. The less you can be absolute about things and understand that there's change and there's inevitableness in that change, the happier you're going to be. When you think life, and when you think of things in absolutes, life, charts, whatever, it makes it a lot more difficult to be successful with it. You have to be open. You have to be malleable. You have to be willing to listen. Doesn't mean you have to agree, guys. But you have to be willing to honestly listen. To be realistic about your listening. Not just be waiting to say what you want to say, right? So, anyway. Here we go. Taylor says, young traders want to charge out of the gate, but it should be a lifelong marathon. Yeah, avoiding major injury. Exactly, guys. Trading is a marathon. I keep saying this, a marathon, not a sprint. I don't care what you did yesterday. If it was a great trade, hey, it was a great trade. That doesn't make you a great trader. Right? Consistently being profitable, which means you're still going to lose some along the way. But month after month, year after year, basically, especially year after year, your capital account continues to grow, whether it's a bull market or bear market. That is being a good trader. You made one trade where you turned $1,000 into $100,000. Man, that's fantastic. I'm so excited for you. History shows that most likely you're going to lose all that again because it was just luck, right? It was just being in the right place at the right time, but it wasn't that you were a great trader most of the time, right? Especially if you're newer to trading. So yeah. Let me see here. What's going on, Claudia? Good to see you. Michael Otis says, the old adage seems to be thrown out of the window online. Better to remain silent and to be thought a fool than to speak and to remove all doubt. Yeah. Exactly. A lot of stuff we can learn from the old people, man. I'm not old yet. I was going to say I'm not 50 yet, but at 50 I wouldn't be old. Just a few years away. Man, it's crazy. Hey, for those of you that are young guns, you're sitting there 20 years old, 25 years, and you think, man, 47 is old, because I remember those days. It's really not, guys. You get here, and you still feel like you did in your 20s, but you're a lot more smart. You're a lot more intelligent about what you do. You have experience. You have life. You don't treat yourself the same way. Well, hopefully you don't, that you did in your 20s. But, man, I remember 15, 20, thinking, man, 50 is old. Here I am at 47 thinking, man, it's really not. It's really not. I don't have aches and pains. I'm in perfect health. Life is good. But I just don't act as stupid as I did in the 20s and when I was in my 20s. There's a lot of things to look forward to there, guys. Let me see here. Dan Physics, what's up? He says, I'm 47. I still feel young, man. I love to hear that. Exactly, man. You know what I'm talking about, right? Who else is Hold Hal? You're also 47, man. Everybody's 47. I love it. He says, I'm 47 too, and I feel young and smarter. Old bull versus young bull. Yeah, that's the whole thing. You know, again, you still generally feel like you did in your 20s. You're just a lot smarter. You're a lot more aged. You're a lot more wise about things that are happening in life. Hopefully you are. Hopefully you've learned, how you approach people. Again, I think a lot of what goes on, unfortunately, with online with the young people today is that this is what they've grown up with. And they're used to that, right? And it's not good. It's not good because life isn't that way. You may think it is, but it's not. And life can be a lot more painful if you don't understand that. Yeah. 83 Madden, what's up, man? Bitcoin anarchist, 54 years young and no longer dumb. I love it. I love it. All right, guys. So there's the DXY still looking for higher up, right? I think EWI, somebody pointed out that EWI was looking until just pretty recently that this would be like a wave 2. And we talked, you guys might remember, we talked about the entire way up, right? It's still possible it could be a wave 1 down, wave 2 up, pullback, right? But it had to go through these certain levels. And as it got through these certain levels, the more of these levels that it got through, the more likely it was to be as I was thinking it was, which was wave 1 up, right? And so now EWI has changed what they're looking at now, of course, as a full thing. But it's the idea that, when you use a specific system, so you use Elliott wave, for instance, it's just because price is reversing a certain point doesn't mean it automatically is definitely reversed, right? Or that it's automatically definitely not that thing, or is that thing, right? Because, again, we're talking about the way that price moves. And you have to get through certain levels to really gain a lot more confidence in the idea that you may be correct or not correct in it. So, yeah, this is where we're at now. I'm glad to see it. It's made it easy trading. Like I said, last year I have just kind of shorting everything. It's the dollar as far as currencies go, Forex being my thing that I enjoy a lot. So let me show you real quick here. Here's a dot chart, guys. Here's Polkadot. Again, same kind of idea here with the volume dropping off through this range here. This range we've been going in since the 21st, or since mid-May of 2021. So this is almost a year-long chart right here. Looking at the possibility, we've got a 1 and a 2 down here with a B, C as a flat. Again, a lot of these pairs looking this way. Ethereum, Bitcoin, DOT, Luna. I think Luna. Yeah, looking like the last 2 days candles is what I mean here. Luna, of course, took that bigger hit. Sol, BCH, BSV, all them kind of Litecoin, all them kind of things. Looking kind of the same way here. So we'll see. Again, the idea being this is 4, and we got a 1, 2, 3, 4, 5 here potentially. Right around the daily S1 pivot. Right dipping right below wave A, which is what we generally expect for a flat correction, right? Volume throughout the range. Dropping off. Showing that there's less and less selling going on. I mean, again, coming off the top here, pretty much flat. And then from this point, volume dropping off. If we were distributing here, we should expect to see volume escalating like this right here, right? But we don't. We see it dropping off as it's falling down here. So we'll see if we've got this low in here rallying back up. What I'm looking for on Polkadot here is an impulsive breakout above the descending channel EQ here, this equilibrium. And that's going to give me a target of the channel resistance. So an impulsive breakout above this daily pivot channel resistance is going to be the first real clue that bottom's probably in. Further breakout above wave 4 here at 2385 is going to give you a bit of confidence there. But really, it's going to be the breakout above the all-time high up here that's going to be the big macro confidence in the count and say, hey, wave 3 is probably going on there. If it is, this is 1 up here, and this is a flat correction for 2 that ends right about where it's at. Let me see here. Then we're looking for a wave 3 up here, a minimum expected wave 3 at about 87.40. Minimum expected wave 5 up here at about 105.60. Obviously, that's a huge bit up from $11, right? 10 times your money right there. Oh, man, that didn't come out there. Let me kind of put this back on that weekly time frame here. And we'll kind of see where this gets us here. Yeah, see? And so my thought is we'd possibly get some kind, this would be a wave 3. So I could definitely see, this wave 3 here overextending, and wave 5. I could see it running these pivots, just taking everything else off here, and we're trading pivots. If we're breaking out impulsively above this, and especially above this one here, I see little reason not to think that we don't reach right above the R5 pivot up here. So could expect to see something quite significant off that, for sure on there. Dot has supported 5. Just a little bit below. There's 422. Get you that weekly S1 pivot. Get you the high volume node here at about 442. 5 just kind of gets you right in here. Right about there, yeah. So yeah, that kind of area there. If it were to continue breaking on down there. As a weekly candle, I mean, we're only 2 days into the week, so it's way too early to make much of the weekly candle. But as the weekly, that looks pretty good so far. And by the way, this dip below, because here we got this swing low over here at $10.37. And so far we have $10.31 right here. Remember when I was talking about the bullish SFP earlier on Ethereum and Bitcoin? Same idea here. You've got this July of 21. So basically 10 months ago, you've got a 10-month support here, right? So dipping below it and closing back above it is a bullish SFP, and we should then generally expect price to rally. So again, watching how this weekly turns out on it for sure. But again, it doesn't have to stop there. It's just only the second day of the week, guys. So don't give a whole lot of thought into it at the moment. But, we are right here at this demand block area, right? So we've got this weekly demand block here. Whoops. And we're just right above that. So there's a lot of possibility with that potentially playing out. We're dipping just above it, so we could actually even dip lower into it. If I was to draw my demand structures on here, I would put it all the way into this actual pivot here. And would say we could potentially even see that break down toward this $8.10 level right here. Which would kind of, if it comes down over the next week or two, would actually be this bottom of the channel here. Well-formed channel. Multiple movements back and forth between the support and resistance. Possible. We'll see what happens. Doesn't have to. Can be getting short front run right here. Come back up. But again, looking for an impulsive breakout above the channel EQ. Gives a target of the channel resistance. Impulsive breakout above that. We'll be looking to get above wave 4 here, 2385. Breakout above that, we want to see an impulsive breakout above the weekly pivot here. Then we get the target up. I mean, that's how the target's working. Then the target becomes this all-time high. Breakout above that, I think we run, all 5 pivots here. And, potentially higher up, could have some sort of blow-off of some sort possibly, but at least running through the 5 pivots. So, yeah. Let me see here. Let me kind of catch up. What pivots do I use to make just one row? Oh, yeah, man. So all you do is get into your pivots, right? You just double click on them. And where it says inputs here, it automatically defaults to show historical pivots. Just click that. Turn off show historical pivots. And then it just shows the current pivots right here. Okay. Let's see here. Let me get back to my other charts here real quick. Let's see. We've got the Nasdaq Composite here, guys. It's the 1 hour chart here. I believe that we've got this wave 1, 2, 1, 2. So wave 3 down here at around 10,732. So we just need to keep on breaking down through that area there. If we break out above wave 2, this may just be a flat. A, B, and then C will come up here probably to this 61.8 to 70.5 area. So 12,059 to 12,127. It could go to the 78.6, but you know, basically we would just be looking for it to be like an A, a B, a C to fill in this gap, and then back down. We do still have this gap here, but you know, that could be overcome, you know, later as we get down here, and then we do a bigger rally back up, right? So yeah, definitely possible on that. While this pivot holds, we should continue to look lower there. Your E-minis. Let's see, again, 1 hour chart here. Same idea. You got your 1-2 here, and then you got a 1-2, 1-2. Looking for 3 down here at around 37.64 and 25. 37.64.25. Minimum expected wave, parentheses 3 target there. Only thing that changes, obviously, is if we break out above wave 2, in which case, again, may just be a flat correction. See this rally up here, maybe to the 78.6 at 41, 112, and 25, which will fill in this little gap right here from May 8th. I think it's just a weekend gap, though. Yeah, it's just a weekend gap. It doesn't have to be filled. Often aren't filled because it's just a product of the weekend. They're nothing special. There's not like a runaway gap or anything like that. Breakout gap. Mark, have a great day, buddy. Let me see here. Dow, the Dow Jones, the Dow. So yeah, looking at I think what we have here is a 1, 2, 3, 4, 5. So like a leading diagonal for wave 1 here, and then a flat correction for wave 2. Filled in the gap, rallied up to 65% retracement, and now we've broken down. If that's correct, wave 3 has a minimum expected target of 31,497.61, right around that 1 hour S2 pivot. Wave circle 3, this larger one here, has a minimum expected target down at 29,196.81. Again, notice there is that gap up here, but that could be filled on a larger pullback, a larger count pullback. So not too worried about it currently. I mean, it's always possible we can get like a leading diagonal here. So 1, 2, 3, 4, and then 5 here, and then it rallies back up. That would be a deep rally. But if we got something like that, instead of hitting wave 3 here, we kind of just rally up through all this, I would be looking for the gap fill up here. I'd be looking for that. So get up here at around 33,948, 33,949, something like that. And then we'll see if wave 2 holds there. I don't know. I mean, I guess it's even possible. This could be, you know, WXY, and then maybe an A, B, C. And then we get this little bit higher up here. Maybe fills in this gap over here. So wave 2 could be printing a larger flat correction here toward this 34,795 kind of area. Yeah. But, you know, if we get this breakdown through wave 3 here, you know, that should not worry about that. If we get a rally from here that breaks up through all this, I'll be looking for at least a gap fill here, and probably, like I said, the idea that wave 2 would be printing this expanded flat correction up toward this gap fill up here at 34,886 and a half or so. How would that be? That'd be a retracement here of, yeah, it's just a 78.6. Yeah, see? That's just 78.6 right there. Right there. I guess 34,800 basically is where it's at there, where that close is. But yeah, 78.6. So it'd be 1, ABC, you know, WXY, ABC or whatever, and then 5 up to 78.6 to finish this wave 2 as an expanded flat and then down. I don't think there's any reason to believe that there's a bottoming or anything like that. Again, we continue to look here. We do have bearish market structure. High, low, lower high, lower low, lower high. Potentially, oh no, this is a lower low here. But we still got room here on the 4 hour. It's just now dipping into oversold. Stochastic RSI sitting above oversold. Zooming out to the daily, definitely has more room as well. It would make sense that we'd probably get down into this area here before we actually started looking for some kind of decent rally. But that'll pull this all into oversold and probably bottomed out here. So we get down to that area. Zooming out to the weekly. Look at that. Look at this right here. Bearish divergence. Bearish divergence. Coming down here. So from here to here led to the big drop. And then from here to here leading to the drop we're at now. We're at that weekly S1 pivot at the moment. You can see here we got the drop, move out, drop right here. So there's a bit of a base right here. So again, could see it falling a bit further into this before maybe rallying a bit up. But the way this is falling, the way this is working, it doesn't look like we've got any reason to think that that we don't have further downside. 1, 2, 1, 2 is what I'm thinking we've got here probably. Though it could always be 1, 2, 3, 4, 5 is a leading diagonal of 1, right? Finishing out 5 here, rallying back up to this area, then coming back down. So until we get some more aggressive movement down, there's still that possibility, but nothing going on here that says we should be going to a new high. Not right now anyway. That could change, as I always tell you, that could change. If this was to rally up and get up in this area, and depending on what that count looks like coming off that, it could always change. But right now, I don't see that happening. For now, I don't see that higher high happening yet. In other words, that there's anything to really kind of see on here that says that we should be kind of concerned and worried about that. Let's see here. Crude. Let me see here. So crude is looking like we've got 1, 2, 1, 2 here. We're coming on down. We're still adding more and more to that. Breaking down below wave B support at 95.28 should indicate that wave 3's in progress toward a minimum expected target of 69.40. Remember what I told you earlier about the gas? Yeah, so that rolling down there should alleviate a lot of the pressure on gas prices. Which is kind of interesting because this comes into the time when we're coming into summer, which is when prices usually rise, travel and whatnot, right? So we'll see how this goes. But along those lines, natural gas, what I was talking about at the beginning of the show here. Natural gas got some possibilities here. So we've kind of rallied up to what may be wave 4 here, right? 50% retracement. We're topped out pretty good here on the 1 hour. So it's possible that this is 5 waves up like oil has done 5 waves up. And this is potentially 3, 4, and 5 still to go. Or this is 1 and we've got 2 and 2 kind of rallying back up here toward the pivot. If we're breaking up into this area up here where we're getting near that top, looking at that, I'll look at that structure and see if maybe we're, potentially heading up higher. But for right now, I think there's a good argument that maybe, again, 3 of 1 is, 3, 4, and we still got 5 coming down a little bit lower. Or that 1 is done and we're getting an A, B, C, and a 2 heading up here right now. A rejection, if this is 1, 2, a rejection of this pivot brings it back down, should be a good clue that wave 5 is probably done. And we're starting our pullback. Like I said, we've already been started there. What it looks like we've already started there with oil. So, again, those of you, having to deal with high gas prices, natural gas prices, may see some reprieve coming in before too much longer. Maybe. I personally, I'd like to see it, out up here at $9. That was a lot of a rise coming off, again, down here, right? So the idea is 3, 4, 5 as we continue to kind of pull this over. So this is, that low in oil came right there after May 2020, right? So natural gas came in there. That low is almost a month later. And so here we are potentially finishing an ending diagonal in the shape of in the form of an expanding, ascending wedge. So right now, the daily's looking pretty good on this right here. But again, pay attention here. We have this big bearish divergence on the daily, which is potentially leading to bullish or hidden bullish divergence here. So again, that hidden bullish divergence could be the idea that 1 is done, 2 is up, and then we'll have 3 coming back down. But there it is on the daily. And here, a larger one here on the weekly. Come from the previous high to this high. So 3 to 4 gives us that. And then that local one right here as well. This is that daily between these peaks. So, yeah. Silver. Give it a minute to load up. There we go. Silver looks like it's breaking down. This was a possible target if this turned out to be a flat. Doesn't look like it. I mean, you know, rallying up further to finish out wave 2. But it didn't, though. It's continued to break down here. Looks like 1, 2, maybe 3, 4, 5 coming in. First subwave getting done. Wave parentheses 3 has a target down here at around 19.55. So we'll see if we get that. I mean, you know, again, always possible. This could be a 1, 2, 3, 4, 5. Or, you know, some form 1, 2, 3, 4, 5 kind of thing coming in. And which would just give us this wave 1, and then wave 2 should rally up again, still toward this box area here right above the pivot. If that's going to be 1 and that's 2, we should head down. Absolutely no reason to believe it's going to head any, you know, significantly higher or anything like that anytime soon. Gold is still a little, you know, again, I'm still looking further down, but as I've mentioned, it's possible that it is bullish as a 4th wave or something. The breakdown below this swing low here, though, diminishes that quite a bit. Kind of reaching, just about hitting my target there. So we'll see if we can get some rally off this and back. You know, once again, it could be 1, 2, 3, 4, 5. So wave 1. Wave 2, minimum expected target. If we rally off this area, minimum expected target is this 1862 kind of area, 1865. Secondary target will be the pivot up here, the 1 hour pivot right up there around 1881. I think we'd be more likely to find resistance right around here, though. You know, again, 1, 2, 3, 4, 5 in that area. Rick Decker, what's up, man? Good to see you. So, yeah, so, I mean, that's kind of what we're looking at there. I'm beyond my time here, guys, so I need to go. But, yeah, you know, again, just a continuation of what we've been looking at. You know, potentially this bullish divergence coming off here on the 1 hour. I could see that move back up. Minimum here, secondary up here. But, you know, again, the bigger picture on gold, possibly looking at this double top up here, which gives us a breakdown through this swing low, gives us a minimum, you know, a pattern target down here around 1340 or so. And I think we could be going further because it's still possible that this whole thing right here is A, B as a flat, C coming down here. But could be right in this area as well and just being a running flat. Nonetheless, I believe we've still got at least this area to get to, potentially swinging down around $1,000, maybe 900. So nothing's changed with my count from all that. The other possibility, remember, is that maybe this is a 3, this is a 4, and we're rallying up for a 5 here. In which case, maybe 2,300 would be the target in that, you know, in that situation, as I continue to talk about. But while we remain below this swing high up here, I think, you know, we should definitely continue looking lower, especially if we print 5 waves down. We're printing 5 waves down here. There's no reason you should be looking at any higher anytime soon. which kind of kills the bull story, right? The gold story, right? The bull gold story, which is, oh, gold's a protection hedge against inflation, right? So if everybody really believed that, why aren't they buying it up so much? Why is there so much selling going on when interest rates are at 40-year highs, right? Got to think about these things. I don't think it is a hedge, inflation against hedge. I think it's just tradable like anything else out there, guys. And so taking it that way has made me a lot of money. Saved me a lot of money too. So I don't know, maybe you're convinced already. Maybe it'll take some time for you to be convinced. Maybe you'll never be convinced. That's okay. We'll continue talking about what we've got going on, right? So there. All right, guys. Hey, listen. You guys have a great day. I really, appreciate you guys joining in. If you're kind and considerate and, you want to discuss things, I have no problem. I never have a problem with somebody having a different outlook. Sometimes I'll look and go, you know what? I didn't see that, or I didn't think about that really in that way. That's a great thing. Other times I'll say, well, I'm looking at it this way and this is why. And that's not there to convince you that you're right, wrong, or otherwise. It's just to give you an idea of how I'm looking at it and why I'm looking at the way I am. And that's what it's all about here, guys. If you come in acting like a jerk, though, man, I will ignore the heck out of you and probably boot you at some point. Nobody's got time for that. Nobody's got time for that. I sure as hell don't. So, yeah, just is what it is, right? Be kind in life, Share a smile with somebody that you're seeing on the street. I mean, you'd be amazed at what people are going through and just what a simple smile from a stranger can do for somebody. In Texas, we do a lot of that, believe it or not. I know everybody's got their opinions in Texas, most of them not having ever been here because of the stuff online. But, yeah, pretty friendly folks. We don't tend to ignore people a lot. We tend to smile, say hi, hold doors open, stuff like that. I don't know. I think the world needs a lot more of that rather than all the nonsense that goes on there. Stop seeking to be validated, guys. Be happy with who you are, with the person that you are. Be a good person. Do good things. Don't be that negativity. We've got so much of that in the world already. Why would you want to contribute to it? Why would you possibly want to be part of that? And if you don't understand that you are, hopefully, when I say things like this, it wakes you up and you go, oh, crap. I don't want to be that person. I promise you, life is going to be so much better. All right? All right, guys. As always, remember, the only thing you control in the market is how much you lose. So please keep working on that risk management. I look forward to seeing you guys on Friday, 11 a.m. Central Standard Time. We'll see what this week has done for us. Don't forget you can join us at Texas West Capital. Just click on this right here, this green button, this link. It'll take you to howtotradetowin.com, and you can get signed up with us there. Tier 3 is the place to be, guys. Got more information than you can consume, more education than you can consume in a single month. But I'll tell you what, even if all you had was enough for a month, it's going to put you eons ahead of anywhere else you're going to be online. Just helping you sift through the outright lies, the half-truths, and things that are all over the place, okay? You guys have a great week. If you're in Discord, I'll see y'all over there in a bit, okay? Take care.